Today, let's delve into the value of Bitcoin, its role, and its usefulness worldwide. But in order to understand Bitcoin, we need to have a good grasp of money. You've probably seen this picture at least once. Over the past century, the dollar should have lost 95% of its value due to inflation. But there is something that has remained steady: gold. Gold still holds its value compared to fiat money. For the context, fiat money refers to money issued by a sovereign state. And yes, a cow or a haircut still costs the same in gold throughout centuries. So what is really going on behind the scenes? I mean, do you think all professional investors would keep their dollars in their pockets if they were so sure to lose money? If that's true, then why is everything still priced in dollars rather than gold? What if it was only us individual savers that have lost money in this game? Okay, let's set things straight. There's a slight trick. In fact, until a population definitively loses every last ounce of trust in their currency, fiat money is as good as gold, thanks to a special mechanism that many of you are unaware of. Let's dig in. The golden line on this chart represents the spot price of gold over time. The black line shows the evolution of $1 deposited at the Central Reserve in 1910 and compounded with the short-term interest rate of the Fed. If this sentence sounds strange to you, it's normal. So yes, by design, if you own $1 and deposit it at the Fed, you will receive an interest rate with zero additional risk. By the way, if you are thinking right now that this may be a financial privilege for rich people, you're not totally wrong, but factually, you are. That's one of the big points of this video. I am Roger Detente, living in Switzerland, and my companies operate Bitcoin mining plants and Bitcoin mining machines in the US and all over the world. Keep that in mind as we go through this chart. What this chart shows is that the US dollar, over the long term from 1910 until now, is as good as gold. So what we need to do now is define what cash is. So the point is, gold is a kind of money that you can't print. So nations invented fiat money that they can print. Why? Because the point of having money is to move value through time and space without overthinking. When you don't know what to do with the value you created, you know that owning money will allow you to buy anything, anywhere in the near or far future. So if you want your money to be neutral, a transparent veil, you need the quantity of money to follow the quantity of economic exchanges in your country. If your economy is growing, then you need to increase the quantity of money. If your economy is shrinking, you need to destroy money. By doing this correctly, you can avoid inflation or deflation over the long term. The point is, with gold, you can't easily manage the quantity of money because you can't print gold, obviously. So humankind invented fiat money, a currency managed by a country that can create or destroy money as needed to match the quantity of real economic transactions. More generally, that's the whole point of the financial system. That's why Elon Musk brilliantly said that the financial system is the operating system of the real economy. To finish the quick tour of our monetary system story, the central bank manages the quantity of money by adjusting interest rates. When the return of private companies is rising, the Fed increases its short-term interest rates to eliminate poorly managed companies. When the economy is struggling for any reason, the Fed lowers interest rates so that good companies in distress can refinance themselves. The economist Knut Wicksell said that the natural interest rate, let's say the return of the whole economy, has to match the market rate, or the price of money in the market. So you need to know and understand that fiat money is split into two components: the principal, such as a bill in your pocket or a dollar in your bank account, and the interest rate that is attached to it. In order for fiat money to keep its value and remain competitive with gold, central banks pay an interest rate to dollar holders. This mechanism enables central banks to keep money aligned with the value of the economic system. Now, you understand that central banks were created to balance the quantity of money against the quantity of economic growth, which was an issue with the gold standard and how they do it. If money printing happens faster than the growth of goods and services, then that money will become less valuable to everyone. Therefore, we must trust that central bankers will do their job and only print as much money as is required to match economic growth. And yes, that is a significant risk in this system. If you want to know more about this, explore the economic theories of Irving Fisher, Knut Wicksell, or Maurice Allais. To make a long story short, if your economy is growing at about 2%, you want the price of money to be close to 2%. In other words, if you have dollars, the central bank, the Fed, will effectively give you 2% more for the dollars that you own. That's the big difference with gold. Luckily, over the long term, gold stocks increase by about 3% a year, so it follows economic growth. However, you can't control that in a precise or specific way. As a side note, many economic depressions in the past were caused by deflation rather than inflation. Modern fiat money, along with the central banking system, was created to address inflation issues. Now, I hope you understand that the value of fiat money is linked to the key interest rate. This yield indicator doesn't represent an investment, it's just the fundamental system adjustment lever. So here's the million-dollar question. Why do the dollars in my bank account lose value? The answer is really simple. The 95% loss of value has gone directly into the pocket of your bank. Banks keep your dollars on hand, but they don't give you back the interest that they generate from your money. So, for over a century, banks have earned the $95 that you lost. But wait, if I buy gold, nobody will give me interest for my purchase. Why doesn't gold lose its value? Because the key interest rate covers economic growth and inflation. We can say that gold stocks have increased by about 3% more or less, which is in line with the magnitude of economic growth. So basically, with gold, you break even. But with your fiat money, the ever-increasing amount of money in circulation is often greatly above the economic growth rate, so there are more dollars issued compared to the increase in GDP. What does that translate to? You guessed it. It means that the value of each dollar is decreasing over time. This depreciation is covered by a higher interest rate. That's why the value of gold and the value of the dollar converge. But if you don't deposit your cash in your central bank, the purchasing power of your cash decreases very quickly. That's why, as Milton Friedman said, inflation is always and everywhere a monetary phenomenon. Over one complete long-term economic cycle, the average key interest rate of the Fed was closer to 6 or 7% rather than 3%. Now you understand why the dollar is still as good as gold, and perhaps more importantly, why you still lost money because of your bank. At this point, I hope you have a better understanding of the key difference between gold and your good old Benjamin Franklin. Gold is a fully independent store of value that isn't actually controlled by anyone. However, its volatility, or its movement around the long-term trend, is greater than that of fiat currencies because of this decentralization. Before going ahead, let's explain what decentralization and centralization mean when discussing money. Fiat money is said to be centralized because one central group, the central banks, controls how much new currency is issued. Gold is said to be decentralized because around the world, a range of people and companies can mine gold without needing permission from a central authority. One of the benefits of centralization is that you don't get big fluctuations in value when suddenly more gold is discovered, making gold less scarce. Or if there's a period of time with next to no new gold discovered, making it more scarce. However, the drawback is that in order for everyone's money to remain valuable, we must trust the central banker to only issue as much currency as is necessary to keep up with the increase in the supply of goods and services. On the contrary, as fiat money is driven by a state or a government, the average lifespan of fiat money is around 1 century. They die either through hyperinflation or when people lose trust in the currency's value. When this happens, people relying on public expenses lose everything they have saved in that currency. If fiat money collapses during a war, the private sector also suffers with no escape. On the other hand, gold has maintained its intrinsic value for over 5,000 years. So why do fiat currencies die? It's all about the rise and fall of nations, a point Ray Dalio has documented very well. He describes 8 strengths for a nation, and money is one of them. Money is the hardest strength factor to build because it involves establishing confidence or trust in the system. This trust arises when an empire demonstrates its ability to be strong and reliable. But on the other hand, trust in fiat money is the last strength to disappear when a nation or an empire falls. At the present moment, the Turkish lira is falling against the dollar. You can see on this chart that the process is slow at the start and then accelerates rapidly. Now, the Turkish lira doesn't retain its value relative to gold because this currency is dying. That's the main risk with fiat money. When everything is fine, like with the case of the dollar over the past century, fiat money is as good as gold as a store of value. This holds true only when you consider the key interest rate. But when things go wrong, you could lose your wealth very quickly. So, before speaking about Bitcoin, I'd like to give you a quick tip. If you have some money that you don't want to spend in the coming days, just put your money in the central bank. How can you do that? Just buy what we call short-term treasury funds, as shown in the examples here. I just want to state that I am not giving any financial advice, and there are inherent risks when investing your money. So, with that said, the last thing to know is that you need to make sure to take short-term US bonds. If you take 7-year or 10-year bonds, you will incur the risk that inflation will be higher than the interest rate you get, meaning you effectively lose money for the next 7 to 10 years. In that case, it's not cash without risk, but rather subject to the rules of the bond markets, which is a whole different topic. Okay, so now what's the point with Bitcoin? Where am I going with this? Bitcoin, like gold, is decentralized. That means, like gold, nobody can stop Bitcoin from running. It's as simple as that. Bitcoin, like gold, is a store of value because its quantity is strictly limited. In fact, Bitcoin is more limited than gold because, in theory, if humanity masters fusion energy production, we could transmute mercury into gold at a marginal cost, making gold potentially worthless. With Bitcoin, this won't happen because Bitcoin is a protocol where the scarcity is written into it. There won't be more than 21 million Bitcoins because it's written in its code. Bitcoin is a blockchain because every 10 minutes a new block is added to the chain. Each block is a pack of transactions. Producing these blocks is the role of the mining network. To make a long story short, the Bitcoin protocol rewards people who conduct mining activities, which require significant capital investment and energy expenditure, with new Bitcoin emissions and transaction fees. Today, when a block is mined, the miner gets 6.25 Bitcoins and all the fees paid by users to make transactions. So miners get rewards in the form of new Bitcoin emissions and transaction fees, which depend on network activities. In fact, Bitcoin is more of a transaction chain than a blockchain. Every transaction is linked to another one, and these transactions are published in batches that we call blocks. That's why criminal activities are much easier to fight when criminals use the Bitcoin protocol, since every transaction is clearly linked to another. If a criminal makes just one mistake that allows the police to discover their identity, all the transactions linked to this one are revealed. Many people think that Bitcoin is an anonymous network, but nothing could be further from the truth. Bitcoin is what we call a pseudonymous network. An address is not directly linked to a name, but more and more addresses are becoming well known. When you register with an exchange, for example, you have to reveal your identity. Many companies and individuals declare their taxes, linking their address to their name and so on. You get the picture. There are data mining companies like Chainalysis that gather all the information they can to map out Bitcoin transactions. Here's what they found. While Bitcoin is by far the largest form of cryptocurrency, it is the least used for criminal activities compared to other forms of cryptocurrencies. In fact, not only is Bitcoin the least used form of cryptocurrency by criminals, but the U.S. Treasury's own anti-money laundering report of 2022 found that traditional fiat currency, not cryptocurrencies, is the preferred vehicle for cybercriminals. So I can say with a very high degree of confidence that Bitcoin is a very good tool for the police to actually fight financial criminality. By the way, getting back to economic considerations, every 4 years, the amount of new Bitcoins emitted per block is divided by 2. This is called the halving. At the end of the day, the halving process guarantees each user of the network that there will be precisely 21 million Bitcoins and not one more. And you know what? On April 19th, 2024, the fourth halving took place and a lot of people had a party to celebrate this event. For me, my company, and my colleagues at Data Factory, we didn't miss the opportunity to celebrate. But the question is, why should Bitcoin take over gold as the main decentralized way to store value? The answer is, for the same reason that digital music overtook analog music and the internet took over print media, it does a better job than the old form of money. Specifically, it is more decentralized, more portable, more divisible, and more scarce. Being the most decentralized asset to store value is a unique feature. As Michael Saylor says, there is no second best simply because we only need one asset like that. Until now, there has only been one asset like gold because gold has the best monetary value. Copper is 90% industrial value and 10% monetary value. Silver is 50-50, and gold is 10% industrial value and 90% monetary value. The beauty of this point is that you don't even need to deeply understand why it's like that. You only need to know which is the best asset to be a store of value, and by its very nature, this asset will outcompete all of its rivals. So, now, we're gently heading to the next question. How do you express the monetary value of an asset? To answer easily, you can reverse the question. If an asset possesses some value, just try to split this value into 2 shares, industrial and monetary. If your asset is more sensitive to economic growth than monetary debasement, then it's more of an industrial commodity than money. By the way, Bitcoin has shown a very good response to monetary debasement. So yes, Bitcoin is more of a monetary value than an industrial one, since Bitcoin also grows when the economy is busting. When this liquidity of the dollars is increasing, the price of Bitcoin is booming. On this graph, to put it simply, you may understand the orange line as the quantity of dollars injected in the financial system. So the question is, does Bitcoin have an industrial share of value more important than gold? The answer is simple too. No, because Bitcoin is industrially, in and of itself, useful for nothing. So if you agree that Bitcoin is worth more than $1 trillion, it's 100% a monetary value. Bitcoin is the best decentralized monetary asset, so it has a very good probability of being the last survivor in its fight with gold. To be specific, gold could remain a standard in an economic area where Bitcoin isn't adopted. However, with the internet and globalization, gold should stay a good standard as long as some areas of the world decide to remain apart from the West. So no, gold is not dead, just as print media is not dead, and there are still great uses for analog music, such as DJs spinning vinyl. But on the other hand, with Bitcoin, you still have a significant share of the adoption ahead of you. That's why the price of Bitcoin has been increasing at an average rate of 30% per year. Also, while Bitcoin has no industrial value, its features as a means of payment are great because, contrary to what people think, Bitcoin with some technologies we call Layer 2 is way more scalable than any traditional means of payment in the world. I'm going to create another video on that subject, but if you only want to remember a few facts and figures, just compare the energy efficiency of Bitcoin with a Layer 2 solution like the Lightning Network to a traditional payment system with your bank. Bitcoin is something like 200 million times more efficient. Why? Because it's an internet-native protocol. That means Bitcoin may be used to replace classic payment transactions in any currency you want, but it is also a protocol with which any money transaction becomes computable. For today, remember that a native, fully decentralized and computable money protocol never existed until now. This means there are a lot of surprises ahead of us concerning new features with Bitcoin. And this is exciting. Always remember that the unknown unknowns part of our world is always the biggest when we try to describe reality. That's why my partners and I launched Data Factory. We know the Bitcoin protocol is an invention or discovery where money, computing, and energy intersect. So, we believe there is a lot ahead of us. As we say, this is only the beginning. Speaking of energy, now that you understand why Bitcoin is a monetary revolution, I think you'd like to know why it's also an energy revolution and what the impact of Bitcoin is on the ESG side. So, check out this video, which addresses Greenpeace's fallacious arguments about Bitcoin. Yes, I can show you why Bitcoin is one of the best ESG assets today. See you next time.